Well, hello everybody and welcome to the Middle Class Investor. It is November 24th, a few days after Thanksgiving, and hopefully all of you had a happy Thanksgiving, got to spend time with family and enjoy good food and all that stuff. Sure there were some conversations about the stock market and oil market and things like that for some of you over your holiday. And of course, the market's really weak right now. Oil market's really weak. We'll take a look at that in a minute. May get a bounce here pretty quick in oil, or maybe not. I mean, it could just be, the first leg down and continued bear market. So anyway, S&P 500 here, you can see that we've got a pretty weak. The market was up a little bit, kind of closed this gap on the week, and then turned around and sold off. And so there's a lot to digest there. You still see, the MACD is still turning down, still going down. And normally, when we have a sell-off like this, we probably headed to the pivot of the first move down lower. So we kind of moved to this pivot. This is what this is right here. It's unlikely to me that we're going to get a bounce all the way up here. That doesn't mean we're not going to get a bounce at all. We, in fact, might get a little bounce up into here and then sell off some more. But it's probably prudent at this point to go ahead and move this pivot area. Whoops, I just disappeared off the chart. Let's zoom in a little bit. Let's move this pivot area down a little bit. Down to about right there. And so the question is this wave 2, or is 2 over, or is 2 still headed our way? And it could just be this is a 1, this is a 2, this is another 1, and maybe 2 up into this area, and then we get the big sell off. But clearly, if we take out this low, let me zoom in here so we can zoom in on what we're talking about. If we take out this low right here, then we've got a series of lower highs and lower lows. I mean, this is a lower high. So here was the high. We made a low, and then we made a lower high. So if we take this out, then we've got a downtrend. Okay. Now, sometimes a downtrend can end and then just turn back around and go back up. But certainly what you want to be doing, if we make our way down here, you want to look for some sort of bounce and then an exit. And that's typically how you manage a downtrend. Now, the risk is you don't really get, this kind of pullback. And so you need to be aware of that. I mean, there's no guarantees that you get this pullback. I mean, it could just crash here. So pick your spots, decide where you're going to get out if that's what your plan is, or buy more, whatever your plan is, and don't get wrapped up in the psychology of it. In fact, let's talk a little bit about psychology, because I found myself getting into the psychology here recently, and I'll explain how. So right here, right in this area, let me take this. You can see the MACD's turned down. So let me go ahead and take this off, just so we can see the price action a little bit better. All right. So you can see right in here, the market started to make its way down. Well, right in here, I was looking for a bounce, like, kind of an A, B, C, maybe back up into this area. And I shared that with everybody. And then my plan was I was going to buy a put here with a stop above these highs here. I was going to buy like a 60-day put, or maybe a 90-day put, something like that. Well, the market just kept going down. So, in fact, if you look at this on a daily, every day, I mean, I had an opportunity, I guess, to buy one there, but I was expecting the market to go up. So it went up a little bit, and then it sold off, right? So let me put it up on a daily. And it is on a daily. Okay, so So it pulled back to here, and I was expecting it to bounce, and it started to bounce, and then pulled back a little bit, and I thought, okay, well, it's pulling back a little bit, and it's going to bounce up into here. Well, then it turned around and sold lower. So much for buying the put. And then I thought, well, maybe it'll close the gap and rally a little higher, and I can buy back. And it same thing. It was weak and down and weak and down. So I never did get to buy that put. But the same kind of psychology can work on you, if you're trying to decide to get out. You just don't know what the market's going to do the next day or even the next week. And so that can disrupt your plans, and it's hard to make a decision if you don't have a firm plan. So my plan was about getting in. So, my plan was if it got up to here, then I was going to buy a put and expect kind of a crash or, rapid wave 3 down. But it never did do that. So I couldn't chase it. I couldn't buy my put, here and then here and then here. I had to just step aside and wait until prices are a little bit better. And I may not get better prices. I mean, that's just part of it. So anyway, this little inside baseball there, around the psychology. And it may not be that, the prices may come all the way to here and then bounce, and maybe I don't get an opportunity to buy that put until later. So we'll just have to see. I mean, the market makes a move and then you make a move. The market makes a move and then you make a move. It's more like a chess game than it is, just waking up one day and deciding you're going to do this or you're going to do that. So just kind of keep that in mind. Let's switch back to a weekly. I didn't realize I wasn't on a weekly. So let's get on a weekly, and you'll see that this week was pretty substantially down. So there's the big red candle. We had a down, and then a little bit of a rally, and then down. So these last 3 weeks, 2 weeks ago we were up, but then these last 2 weeks have been pretty down. And like I said, we could get a bounce. A lot of times this is what's considered a big red candle. So a lot of times you look for a bounce into the midpoint of the big red candle before resuming down, and that could be an intraday type of deal. It doesn't have to close up there. But anyway, just a lot of weakness in the market, and there's still I think there's still more to go, because there's still people talking about this being a bounce and a great buying opportunity. As long as you got that, there's more downside potential. It's not until people go, oh, this is the big one, or they start really exhibiting some fear that that you're going to get a pretty good bounce. All right, so let's look at the 10-year. Well, let's look at the VIX real quick. We didn't look at the VIX. VIX should have been up this week. Let me switch on the 10-year. Let me switch to the VIX. We should have had an up week in the VIX, and of course we did. VIX is up to 21 now. And just a few short weeks ago, maybe a month and a half ago, it was down here around 12. So there's a lot more fear in the market, although not enough. And we're probably headed for lower prices. So just keep that in mind. Now let's go to the 10-year Treasury. Rates, continue to pull back, but notice we've got what looks like an ABC pullback. So you could get, next week and the week after, you could get in maybe the next several weeks, you could get a pretty strong rally in the 10-year Treasury. And yields, in other words, bonds sell off, yields go higher. Let's look at the 13-week Treasury. We're still above that line. And the short-term Treasuries look even stronger. So I would say that the chances, the odds of having a bounce in the 10-year are pretty good. So I would look for that this week. Let's put a little flag on here just to kind of gauge what we see. And I'm going to take the extension off. So we should see a breakout of this flag pretty soon. If we do, I mean, you're looking at the 10-year. If this is half the flag and then a pullback, then you're looking at the 10-year, being up here around 3.5. 3.75, something, or 3.6, something like that. Again, bond funds, as long as this 10-year treasury is moving up, bond funds are losing money. So just keep that in mind. If you're going to open up your statement, if you're just going to go from statement to statement, the last statement was 1, 2, 3, 4 weeks ago. You might show a little loss. You might show a little gain between, let's say, a monthly statement. But if your statement was last quarter, you're probably showing a loss, okay? Because last quarter would be back here somewhere, and we're substantially higher than we were 3 months ago. All right, let's look at the countries. Germany. Germany is generally considered the jewel in the euro, and you can see that it looks like it wants to break down here. We talked about breaking out of this channel, and it looks like it wants to do that. So right now it's made kind of a double bottom, so it could bounce here and go up, or if it goes down, I would look for Germany to come all the way down here to around 23 before it really starts to look like a bounce. All right, Japan. My guess is all of them are going to kind of look this way. They're all threatening to break out of these channels. And if they do, like Japan's probably coming all the way down here to around 47, 46, kind of where this line is. United Kingdom. If I can get United Kingdom up. Oh, it is up. Okay, well, it looks so much like the other chart, I didn't realize it was up. But again, it looks like it wants to break down. It's back out of the channel, probably coming down here to 27 or so, this area right here. Let's go look at oil. I think that's one of the most interesting things right now. I mean, oil is just completely, look at this sell-off. You haven't had a sell-off like this since back in this area around 2000, end of 2014, 15. But market is really accelerating to the downside. And this tells me this is probably some sort of ABC, because A waves are usually really strong like this, and then the B wave will be a little bit choppy, and then C will be kind of choppy back down. So, my gut feeling, I've said this for a while, is that oil's in some sort of consolidation sideways. So, maybe we get a bounce, maybe not this week, but maybe in a couple of weeks, bounce back up here into this area, and then a sell off down into the lower part of this channel, and then we'll get a rally, and then sell off, and rally, and then a final breakdown maybe several years from now into these lows around 26. So I would not be long oil stocks. In fact, I think I was saying that back here, don't be long oil stocks. We had kind of a double top, and then market rolled over pretty rapidly. These are pretty rapid moves. This is all week. These are weekly moves, and it's underneath the 5-period exponential moving average. We still haven't had a close above that 5-period exponential moving average. So that's a pretty powerful trend right there. So don't get out in front of that. Let's just look at a couple stocks there. Chevron Phillips. Some of these big ones are chopping around a little bit more. They're not as abruptly down, but that's good. That's giving you a chance to maybe get out of them. ExxonMobil, again, same kind of thing. Not as abruptly down. But it's probably some of the other ones like EOG. Let's get EOG up. EOG, Pioneer. See, those are sharper moves, but they also ran up higher, and so that's happens a lot of times once the commodity rolls over. The stocks that ran up the highest also sell off the quickest. I don't know. I can't think of any other charts right off the top of my head, so we'll just stop it there. Let's look at gold. Gold, we had this consolidation right here. Let's zoom in on this. We talked about, breaking out of this consolidation, and it pulled back right to the line, which is, when this happens, I'm always amazed. I don't know when I drew this, but maybe several weeks ago, broke out, came right back to the line. and then bounced. So you probably got gold setting up for a good move, at least back to these old highs here, and potentially even higher than that. But I would say, you might want to. There's a gap here around 1337. You might want to, if you're trading gold, you might want to throttle back your position some here around 1337. Silver's been a little bit more challenging. It doesn't look like it's breaking out as rapidly. In fact, it's not. There's no doubt about it. And I'm not sure what's happening with silver here. Hold on, I got a message there. I need to clear. Yeah, there it cleared. But sometimes this happens, and silver might. Sometimes we do have it's pretty close. It's kind of a double bottom here, and I would say if you get a close above this high here, there might be some catch up in silver. Silver might really start running hard to catch up to gold, and could be a good opportunity there. So look at the euro US dollar. The euro looks really good here for a bounce. In fact, I tried to trade it the other day and took a small loss, but the opportunity I think is still there. You can kind of see this line, this falling trend line, and we bounced right back to it and kind of took off, and it's just kind of hanging around there. But if you get a sell off, if you get a close in the euro above these highs here, these highs right at this high right in here off this candle, maybe a good opportunity for the euro, maybe to come all the way back into this, where this red line is around 120, and that'd be a pretty good move. Probably what'll happen is if it does move out, it'll move to the pivot and then pull back and then move higher and then pull back. Notice this looks like a 5-wave move and then rally. So we could be on our way to a 5-wave move here, and it could be larger than this, depending on if you get a 4-5 extension several times. But this looks like a really good, at least a move back into here. The question really is this ABC here, or is this just A and then B up into this area and then we get a deeper C? It's hard to say, but if you look at the time frame here, this went from very beginning of 2017 to this is like 14 months here, and the pullback has only been what is that? 9 months. So, there's an argument to be made, argument to be had that this needs to go a little higher, and then we get another pullback. But I think when you get these opportunities, you got to take them, because what we do have is we have a low, an important low, right? That's what this yellow box is. We have a move off the low, and then we have a pullback to a higher low in and around the 4th wave low. So to me, you got to take this trade and hope that it's a wave 3, and that it actually goes all the way back up here to 1.36 or 1.38, something like that. But you got to be looking for evidence to the contrary while you're in the trade. So anyway, I think there's a good opportunity in euro. It may not be perfect timing. In other words, you running out Monday and taking this trade may not be the best timing. It may be Wednesday or Thursday, but we're very close to proper timing on this trade. British pound US dollar. Again, now the difference between, I think the difference between the British pound US dollar and the euro US dollar is you have to kind of make a decision. Both are, pullbacks to a higher low. One of them could be a C wave and then down, and one of them could be a 3rd wave, which could last much longer. And I think what you have to decide is is the euro stronger or is the dollar stronger? And I think, the dollar's had a pretty big run. Do I have the dollar? Let me see if I've got the DXY. Let me see if I can pull up the DXY here. It's dollar index. There we go. So the dollar's had a pretty big run and then a pullback. And so I think the question is, though, let's wait for the dollar to come up. But the question really is the dollar in a bull market or is the dollar in a bear market? And I think the dollar's in a bull market, which means the euro is probably in a bear market, which means the British pound is probably in a bull market. So, but you gotta kind of pick one, right? If you trade the euro in a bear market, then you can trade the British pound in a bull market. I don't know why it's taking so long. We may not be able to look at the dollar, but we'll look at while we're waiting on that. We'll switch over to some Elliott Wave stuff, and while we're talking about the euro, let's just look at what they have on the euro, if we can. Let's see, 30-year Treasury, U.S. dollar. So they're showing the U.S. dollar in an ABC correction, and they're showing the ABC maybe being over. Maybe it is, maybe it didn't. This ABC could go a little higher, above this line, in which case the euro might go a little lower in the short term, and the British pound might go a little higher. So it's just we're in a tricky spot here. I think what I would do if I was trading the dollar, what I would do is, let me just pull the euro up. For something's wrong with the dollar. Let's say you're trading the euro, and you think maybe the dollar's gonna bounce, which means, you're trading the euro. Well, let's just focus on the euro. Let's go back to the chart real quick. Here's the dollar. So let's say the dollar, so you put a bull flag there and it breaks out. And so you think the dollar's going to go a little higher. Well, that means that probably the euro is going to go a little lower. But I'm just telling you, the euro to me looks like a good long right here. Probably, at least back up here to this 126 area. That's the way I'm playing it anyway. I'm going to at least play it to the 120 area, but there's a good chance that it's a good chance it could actually go even a little higher. It's just hard to tell if this is complete or not. To me, this move looks complete, but this move does not. So I'm expecting this to go, into this 120 area, and then another C sell-off, maybe down in here, closer to parity before the euro really takes off, which means the dollar might go a little higher in the short term. So anyway, that's kind of the way I see it. Hopefully that helps. Sometimes it's confusing when you talk about these currencies because they're ratios of each other, and so that sometimes can confuse things. Here we are again on the S&P 500, and you can see, I got a lot of garbage here, but you can see this looks like it wants to, come down at least down into here before bouncing. So I would look for that, and you just have to make a decision when you're going to get out. If that's your plan. If your plan is just to add, well then add, but realize you could be adding, all the way down to a very low number. So, all right, everybody, that is probably it for this week. Thanks for coming in. Share this with your friends and family. In retrospect, I probably should have had it out before Thanksgiving. That way you could, when you're having these conversations with your friends and family, you could have something to direct them to. But, you'll have another chance around Christmas time. Okay? Thanks a lot, everybody. Thanks for coming in. We'll talk to you later. Bye-bye.